Okay, welcome everyone to this deep dive. Today we're looking at the Malaysian stock market. It seems the market's been, well, showing renewed weakness. And a big factor highlighted in our source material is this continuous outflow of funds. So our plan today is to unpack the data points, get beneath the headlines, and really understand the signals the market might be sending you right now.
That's right. It's easy to just see the headline number, the index, but this analysis suggests the real story is deeper. It's in the money flow, the broader market action.
Okay, so let's start right there. What did the analysis say about the FBM KLCI's performance, say, on June 3rd?
Right. So on the 3rd, the index itself, the FBM KLCI, it was down 5.1 points, closed at 1403.25. That's a drop of 0.34%. Now, the report did note it stayed above that 1500 level, which is something, but technically, it looked fatigued. The suggestion was, without some good news soon, it could actually slip further.
Fatigue. And was this just the main index, or was the weakness like more widespread according to the data?
Oh, it was definitely broader than just the main index. The analysis showed declines pretty much across the board, FBM 70, FBM SCAP, and notably the ACE market, that one fell quite a bit, 1.52%.
Wow, okay.
Yeah, and that kind of weakness, especially in ACE, it signals that maybe those higher growth tech stocks, the newer economy plays, they're being overlooked right now.
Interesting. And how did things look sector by sector?
Well, out of the 17 major sectors they track, over 10 were down. The report really called out some significant drops. Technology was down 1.43%, industrial fell 1.68%, healthcare down 1.09%, and energy dropped 1.28%.
So some key areas taking a hit.
Exactly. When you see those kinds of segments falling, it points to pretty widespread selling pressure.
Okay, now you mentioned the money flow earlier.
Yeah.
The analysis seemed to really zero in on this as the main issue. What were the numbers there?
Yeah, this was framed as a core pressure point. On June 3rd, foreign investors were net sellers, big time. RM 457 million out. And the source stressed was that this wasn't just a one-off. It was the fifth straight day of net outflows from foreign funds.
5 days. Okay. And I assume local players tried to pick up some slack.
They did, yeah. Local institutions, they stepped in with RM 413 million in net buying. And retail investors chipped in too, about RM 44 million net buy.
But was it enough?
Well, that's the thing. The analysis pointed out it just wasn't enough to really absorb that big wave of foreign selling. And look at this stat. The foreign transaction share was high, 67.7%. That really shows you how dominant their activity was on that day's flow.
Right. Their selling just outweighed the local buying power.
Yeah.
How does the currency, the ringgit, fit into this picture according to the source?
Good question. The report linked this to the ringgit weakening against major currencies. It gave specifics. 4.2475 against the US dollar, 3.299 against the Singapore dollar.
Okay.
And the consequence, well, a weaker ringgit, especially when the US dollar index itself is nudging up a bit globally. That increases import costs for Malaysian companies. That puts pressure on corporate profits, right? So it's another headwind for the market.
So you've got funds leaving, local buying not quite bridging the gap, and currency pressure on businesses. Did the analysis look outwards at all? How did other markets compare?
It did mention that, interestingly. The feel in external markets was described as slightly more optimistic. U.S. stock futures were adjusting, but mostly pointed up. And China and Hong Kong markets, they were quite strong. The Hang Seng was up 1.53%. Shanghai Composite up a hefty 4.03%. So the report kind of hinted that maybe some funds were shifting towards what looked like more attractive regional markets at that moment.
Okay, so if you pull all these threads together, the index movement, the broad selling, the big outflows, the currency impact, what's happening regionally? What was the overall picture the analysis painted?
Looking at all that, the analysis basically described it as a kind of vicious cycle. You get capital outflow that leads to low sentiment, which then puts more pressure on the index.
Right.
And the report really emphasized that this cycle needs to be broken and fairly quickly to stop investor confidence eroding further.
That definitely sounds like a tough spot for the market. So for you, the listener, following this, what did this source say you should be watching for? What are the key signals?
Yeah, it highlighted a few things to keep an eye on. First, obviously, any sign that foreign funds are starting to come back in, that would be huge. Second, watch if local institutions really ramp up their buying, like significantly increase their support. And third, look out for any potential short-term stimulus measures from the government, anything aimed specifically at stabilizing things.
Makes sense. And in terms of actual investing strategy in this environment, what advice did the report offer?
Generally, the advice was cautious. For short-term trading, the suggestion was basically control your positions, manage risk given the uncertainty. But for longer-term investors, the source pointed towards maybe defensive sectors, things like REITs, communications. Those could potentially be safer havens if the market stays volatile.
Yeah, it really does sound like the market's in what that analysis called a confidence vacuum.
That phrase really stuck out, didn't it? It seems to capture the mood the data suggests. But interestingly, the analysis didn't just leave it there. It ended with a more thought-provoking point.
Oh?
Yeah, it basically said, look, history suggests these periods of really low sentiment, lots of uncertainty. They often hold the seeds of future opportunity. The real question it posed for you is whether you have the patience to kind of ride out the current storm and wait for that potential opportunity to emerge.
That's definitely something to think about as you process all this market information yourself.